Good morning, everyone. It is the 23rd of March, Thursday. It's midday. I did just shoot this on the wrong screen, so I'm going to redo it now. Basically, going to go over an adversity trade this morning that I got stuck in, how I got out close to break even, and just quickly doing our analysis, going over the S&P 500 on the daily here. No man's land. There's no real direction for me here. Neither in a downtrend or an uptrend. It's kind of just pitter-pattering around in a kind of range between 4,100 and 3,900. So no strong direction for me right now. US30 still in the downtrend on the daily, but has carved out this U shape here at 31,500. 4 hour. On the US30, we have this still in a downtrend. We had this rejection yesterday during the FOMC, and we'll go over exactly what happened there. It was as planned in the analysis, and it's a pattern that occurs a lot during news releases. It's like the feign move to the upside or downside, and then the push in the opposite direction to grab liquidity. And then we've had this imbalance here fill, which we're going to go over. So for me right now, holding at 32,000 supply, and more on the bullish side than the bearish side with today's price action. 1 hour time frame, we did reject exactly that top area there that we were looking at yesterday. The overhead sliding resistance level was touched to the point there, rejected at, and so we are still holding within this downtrend. That was our last line in the sand for this downtrend, this downward action to be holding, and it's still within that on the 1 hour. So still in a bearish territory in terms of momentum. What I want you guys to look at here that's important is this imbalance candle we have, this 1 hour imbalance candle. We have this thing called a kangaroo tail, which is this rejection to the top here. What that means is that there was a lot of buying in the 1 hour and then a lot of selling in the same hour. So a lot of selling pressure that then pushed us into a negative 1 hour downtrend and gave us this imbalance candle. So we're going to look at it on the 1 minute very shortly. But you can see, just if you look at this candle, we do have a lot of other downward candles, but nothing as thick and as big as that. You can see it's smaller here, it's smaller. All along here it's smaller. There's nothing of that caliber. Really for the past few months. And I did say in yesterday's live analysis as I was trading FOMC or talking about FOMC that this pattern was something that was very unsafe for buying and that I would be staying out. And we can see what happened straight afterwards is a push to the downside. This big peak here, this needle thing, it happens a lot during news releases, and basically it means there was a lot of buying at the beginning. A lot of people got stuck on the wrong side, and then it ripped to the downside to take everyone's cash. So it's a way of looking at it anyway. Liquidity was up here and the orders were up here. So we had a fill, and we filled the imbalance to the left-hand side here. If we go to the imbalance chapter in the course and the technicals, this imbalance candle has been filled exactly to the top where the supply orders are, and now it's kind of dripping back to the downside. On the 1 minute time frame, I want to go over a trade that I did this morning. I wasn't present fully at the screen. I did get caught in this runaway area here, which it was unexpected. But in hindsight, looking at the imbalance, it's not something that I'm looking at all the time, but it makes sense. But I got caught in it, and what I did was mitigate that loss. I want to just explain to you the concept here. Like normally what would have happened is it would have gone up to this area here and then come back down, and I would have got out of break even, because once this pattern occurred, if we can just ignore everything else. So say for example, I put in the, it was here. This is what I saw price at. I would wait for price to come back down to this area or close there too, and I would get out of this trade. Now, because I'm in 30 lots, for a $300,000 my Forex fund account, our negative breathing space of daily breathing space is $15,000, because more than it's 5% of the account, and that's all the way up here. So, that's I would see that and immediately be like I'm in a bad trade. Already from this pattern, it seemed, pretty strong to the upside, but this definitely tells me that I'm in a bad trade. And what I want to do is get out of that trade, and I want to wait for it to come back down here. Okay. What does happen though, and I wasn't at the screens at the time, is it runs away like this to the upside. So you've got no chance to get out of that. And this is this is worst case scenario. You could be stuck in where you're like, oh shit, what's happening right now? I'm all the way up here. I'm in negative $7,500, which is not good. Okay, but also I'm just going to show you how to get out of that. And because we're in a strong area of supply, that was our area of supply to the left-hand side from yesterday. Demand, supply through here, demand. And I'm just doing an average area where demand and supply is held. You could actually raise it a little bit to coincide with the most recent area of supply here. But generally, this is the area of supply. You could even go a little higher to really mimic this area, the previous area where the orders were, which is here. Okay, you're in that area. And so what I'm doing is this is worst case scenario. I'm going to add another 30 lots. It's the same size that I have on down here, and then I'm going to get out basically midway between where the last entry was and where this entry was. Okay, expecting if it keeps going doing this, you're just so unlucky, and it just doesn't work like that. Already this is too much. It's overbought. So I'm just waiting for a little bit of a pullback down to there. And the concept mathematically is that we're in a negative 1R position size trade here, then a negative 2R trade, okay? And then we move back down, we're in a positive 1R trade, okay? So when we move back down with a position size on here, we'll be in positive 1R. So negative 1R, negative 2R, okay? On this trade, just to clarify, think of it as if you have... you've just got one order here, and then it goes against you by one, by one size of movement, and that's the profit you're trying to get, right down here, and it goes against you. But so say that's $100 you're trying to make, it goes against you by $100, so it's negative $200. Okay, so this is negative $100, and then it goes back against another R, which equals negative $200. Okay, if I add a same position. and that same position, if it falls back down to there, that equals $100, and this one's dropped back down here, so it's only at negative 1R. That means the cumulative profit and loss between both these trades is zero, and so I'm at break even, and that's what I'm trying to do. Okay, so you can see this morning on the chart here, these are the trades that I entered. I was stuck in these positions here, and then this runaway happened, and I got in with a sell up there, and then got out for break even, or close there to break even. It was a little bit of a loss on the first pullback that I saw back to the top of the river band here. But this is a very strong pattern that we didn't want to be in, and so this is what I did. And so I added there. Sure enough, it started coming back down. As soon as it came back down, I got out of that trade. I got out manually, just when I saw it drop far enough. I'm not trying to wait for it to get back down here. That's the whole point. At this point, while it was up here, I've realized that it's gone too far, and I don't want to get it down here. You don't want to. The reason you don't want to add the 30 lots here is in case this thing happens, right? This is your last. This is the worst case scenario, and then you've got that up your sleeve to add. You still got plenty of breathing space up here. If it does end up just shooting against you and blowing the account, so be it. On bigger accounts without these tight risk rules, you don't have these problems, and you can always get out of a trade. But that's the way that I'm doing this here, and then we got out for pretty much close to break even. So that's how to scale in to an adversity trade that pushes hard against you, and the mathematics that's behind it. Just looking at yesterday's trading. We can see that we had this exact same pattern the pattern that I drew in. If you refer to yesterday's analysis, was exactly what happened to the T. A bit of a coincidence there, but it's a pattern we see. We bought up into supply, we shot to the downside, and we dripped straight up to the downside in the afternoon, which was pretty crazy, to be honest. In looking at what happened. I didn't take a scalp here, and then I got cold feet because of the pressure to the upside here with the scalp, and then this hot knife through butter action happened. I took a little buy here, but after that I was done, and sure enough, we collapsed to the downside after this pullback. So FOMC, you never know what's going to happen. There is a chance that it's going to push in a certain direction, definitely outside of the river, and that's what happened at the end of the day. And this is not a good trade to be stuck in. Even though it does end up closing at the open. it's gonna, you don't want to be at the end of the day at a super low. Okay, so this is filled. This crazy action filled this morning up to the top here. And it's just one of those patterns, that if you can master this is not going to happen all the time. But if you do see that kind of thing happen, you've got your planned area, you've got your alert, and your alert would have been here. My alert was here, okay, and it's like, cool. My alert goes off. Okay, this isn't closed. I'm sitting in this position. What do I do? Well, okay, now I'm going to wait for it to drip back down to here and get out. And then what happens? It just keeps pushing further away, goes to the next area of supply. I enter and then get out for break even. Okay, it is doable. It is, just practice it. And this is kind of the only adversity that you're going to come up against, and it's the worst case scenario is this. And that's what happened this morning. And that's how you get out. Have a great day, guys, and I'll see you tomorrow. Cheers.